Two fintech stocks that have taken quite a hit recently. The first one we're going to take a look at is one that's very popular among the investment community. The second one, I feel it's one that's being slept on and not being talked about as much. Like always, we're going to take a quick look at future growth, fundamentals. We're also going to take a quick look at technicals and even valuation metrics. So let's get started. All right, so the first company we are going to take a look at is Upstart. This is the online lending platform. Banks love to partner with them because they use artificial intelligence to reduce expenses. They also use it to reduce fraud risk and so much more. And we're going to see a good portion of the revenue comes from the partnerships with banks. But we can see right now, if you go to their website, it's pretty much if you want to find a fast personal loan, you can do it pretty quickly through Upstart. The company is traded under the Nasdaq as ticker UPST. As I am recording this episode, the stock is sitting at $125.58. It's pretty much flat for the day. Right now, the stock is sitting at a market cap of $9.68 billion. And we can take a look from its 52-week high, which was just a few days ago. The stock is down over 30.7%. Some breaking news about Upstart today, June 14th of 2021 is their expiration date on lockup period. So some investors might be a bit worried that insiders might be selling some of their positions within the upcoming days. That could be a good driving force for the stock price dropping so much in the past 5 days. If we take a look at future growth, this company is expected to grow 34.2% on average for the next 3 to 5 years. So this is a nice hyper growth stock. If we take a look at trailing 12 months, the company is profitable. They are positive in cash flow from operations. So they have strong fundamentals. Now, if we take a look at their balance sheet, they have about $257 million in cash and short-term investments and about $41 million in debt. So in my opinion, strong growth, strong fundamentals, strong balance sheet. So the whole fundamental as a whole, Upstart is looking pretty impressive. Before we take a closer look at their most recent earnings, if I am providing some form of value, guys, make sure to hit the subscribe button, the thumbs up. It really does help with the channel. Also, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content for you guys. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Upstart did report their Q1 earnings on May 11th, 2021, so about a month ago, and we can see some strong growth for this company. So like I mentioned, Upstart is an artificial intelligence lending platform partnering with banks to improve access to affordable credit. With their share models, they look at things like employment history, credit experience, education, application interaction, bank transactions, cost of living to determine if the person is able to take a loan. 71% of the loans are instantly approved and are fully automated. If things are fully automated, you know what that means. It reduces a lot of the expenses. Another great thing is 96% of revenue from Upstart comes from fees from bankings or servicing, so they don't get that credit exposure. For example, if someone defaults on a loan, it doesn't really affect Upstart. Maybe some banks might not like it, hey, your platform is not working as intended, but the overall credit exposure is definitely something Upstart doesn't see. Upstart has also recently increased its market opportunity. It has expanded into the auto refinance from 1 to 33 states. Now they are more than 2/3 of the United States populations, increased their dealership footprint by 45% in Q1. They are now, for example, the certified digital retailer provider for some of the biggest brands here in the United States. Revenue this most recent quarter saw 90% growth compared to the same time last year. This company is profitable in GAAP earnings, and they're also adjusted EBITDA profitable, which represents 17% of the company's total revenue. They also gave an outlook for Q2. They expect about $150 to $160 million in revenue. That is going to be much higher than Q1 of 2021. So they're seeing growth quarter over quarter. And this is going to see dramatic growth year over year. Same time last year in Q2 of 2020, they had about $17 million of revenue. You can see COVID definitely affected the business for some time, but the company is going to show strong revenue growth. I do believe this is going to excite a lot of investors when the company reports the next earning. Obviously, Obviously, this kind of already has been foreseen, but there's always someone who kind of gets excited because they missed out on this outlook. For the full year, they expect revenue of about $600 million. They also expect their adjusted EBITDA margins to be about 10% for the full year of 2021. So the company fundamentally is definitely looking pretty great. All right, so the second company we're going to take a look at is the Stone company. This is a Brazilian fintech market, and they have solutions for all types of companies you want. For example, their main Stone has a point of sale solutions, and this is for everything from small size, medium sized business. They also have Pagamé, which is a way to kind of digitalize retail in Brazil. This is a payment service provider that helps businesses accept online orders quickly. Then they also have MultiPeg, which is intelligence for your digital business. Here you have stuff like reoccurring billing, like automated retrial and subscriptions, and simple integrations that you can put on your website. They also have Equals, which is a smart financial management. If you want to understand how your business is going, you would want to use Equals. Then they also have Capta, which is a TEF solution. So we can see Stone company is a huge fintech business. Right now it's traded under the NASDAQ as ticker STNE. It's currently sitting at $63.46, and it currently has a market cap of $19.64 billion. From its 52-week high, the stock has definitely seen quite a correction. It's down about 32.5%. If we take a look at future growth, this company is expected to grow 23% on average for the next 3 to 5 years. So we got a nice hyper growth stock here. Stone is profitable in GAAP earnings, so that's a great thing. If we take a look at their balance sheet, they have about $11.2 billion in cash and short-term investments and about $6 billion in debt. This is in their local currency. But what can we see? A strong growth company, a company profitable in GAAP earnings, and one with a very, very strong balance sheet. Some recent news about the company: on May 20th, they authorized a repurchase program to purchase up to $200 million in outstanding shares. This is, just want to say, $200 million is a little bit, but remember, this is a company with less than $20 billion market cap. On June 11th, the company announces the issuance of some bonds. These 7-year notes will have a final yield of about 3.95%, and it will help the company raise about $500 million. In my opinion, this is cheap money, and I want to see what this company is going to do with this. If we take a look at their most recent earnings highlights, their total payment volume, which I believe is the most important metric for a fintech company, is up 35.5% compared to the same time last year. Their total revenues were up 21%. So we're seeing huge growth overall for the company. All right, so now let's take a quick look at technicals. I just want to make sure they're not overextended, because I do believe if they are overextended, it does increase the risk a bit. Upstart right now has definitely seen quite a pullback and is sitting next to its short-term moving average, eliminating a good portion of the risk. Now, if we take a look at Stone, Stone is a longer company, so we have more moving averages here. We can see this company has also seen a nice pullback, and it's not overextended at all. This doesn't mean the stock prices can't continue to go down, right? That's always a possibility. I just do believe the good portion of the risk has been eliminated. Now, if we take a look at valuation metrics, I want to take a look at forward price to sales ratio. First, let's start off with Upstart. Upstart right now is sitting at higher levels than it was in January of 2021. This is definitely something to keep in mind of. It's a bit more overvalued, but remember, they are kind of growing at crazy levels. They're also expanding into different types of lending programs. Now, if we take a look at Stone, in my opinion, is looking pretty attractive right now, sitting at levels last seen in around July of 2020. So I do believe a good portion of the risk has been eliminated for Stone. Right, so now my overall thoughts. First, Upstart is not in my portfolio. Stone is in my portfolio. Let me just say, both of them are looking pretty impressive, strong growth. So I wouldn't mind having any of them in my portfolio. If I ever want to diversify in a little bit more fintech companies, I can definitely see Upstart making that list and becoming somewhat of a tier 2 stock in my portfolio. Stone at the moment, because it is an international company in Brazil, I believe there's a little bit more risk. So there it's more like a low tier 2 stock. So I hope you guys enjoyed today's episode. Like always, take care, have a good night, and see you next time.